Case study: Chinese automotive industry. In 2009, China dislodged Japan as the #1 car producer in the world. This feat was accomplished by a stunning production increase of nearly 50% in 2009. As you can see from the graph, this statistic is only one example from a string of impressive growth rates that have fluctuated between 5% in 2008 and 70% in 2000. These amazing growth figures are a testament to the strength of the Chinese economy and have been mostly fueled by increasing domestic consumption. The industry's next phase will be to move beyond domestic consumption and become an auto powerhouse. Regardless of when this transformation occurs, China's economy will continue to benefit from this growth and help increase the standard of living for its citizens for some time into the future. Because of the relative infancy of China's auto markets, many Chinese companies do not have the technical knowledge and technology to develop and produce automobiles. To overcome this deficiency, local producers have created joint ventures with global brands who share in some of the production responsibilities and profit. As of 2010, only 44% of the auto market was produced by pure local brands. However, these companies and the Chinese government are looking to expand this percentage through increasing market expertise and manufacturing capacity. The industry is also heavily weighted towards passenger vehicles with 70% of the market. This can be explained by the rapid increase of the amount of people who can afford cars, but may gradually shift as the traffic in cities continues to worsen and public transportation becomes more common. The overall growth of China's economy has been the major growth driver for the auto market. Between 1990 and 2004, the economy grew at an average rate of 10%, and it was during this time that the auto industry saw its largest growth. The Chinese government has supported this growth by investing over $25 billion in transportation-related infrastructure construction, which further encourages China's middle class to purchase automobiles. The growth of the auto industry also benefits related industries such as manufacturing, construction, and auto service companies. As discussed, China's government and auto industry executives have set a goal of becoming a major player in the global auto industry. Unfortunately, most Chinese auto companies are relatively small compared to their international competitors and require outside expertise in order to properly serve the domestic market. To address this problem, many of China's largest car companies have started to increase scale by buying underperforming assets from developed car companies and key supply chain partners in local markets. Foreign investors have taken notice to the potential of the Chinese auto market and have been more than willing to fund growth initiatives and mergers in order to profit from this growth. China's culture places a lot of emphasis on education and thus has a large supply of college-educated workers. This is an extremely important aspect of the economy and makes it possible for China to reach its goal of branding itself as an auto heavyweight. The industry's current practice has it copying and reverse engineering foreign companies' technology. This is a very large risk that foreign firms must weigh and contemplate before entering the market. China must also consider how companies perceive the country and if the benefit of attaining the technology overcomes the risk of turning off some firms. China believes that its growth prospects will convince companies to invest in the country regardless of the risks, and has thus far been extremely successful in this strategy. China's largest cities are already known for their infamous traffic jams. This will undoubtedly become worse as car production continues to increase and more citizens can afford cars. The government and industry professionals are trying to overcome this challenge by the infrastructure investment that we discussed before and encouraging workers to use more public transportation. China has been a hotbed of human rights issues since its amazing growth started. Many workers have started to demand better working conditions as well as better pay. Although many industries in China have been affected by these issues, there has been a concentration of strikes at automotive suppliers. Honda, in particular, has had many problems with its suppliers and were forced to shut down numerous plants throughout the year because of strikes demanding higher pay. Many of these problems are caused because Chinese provinces are free to choose their own minimum wage. Therefore, when a company raises its wage for certain employees, it is not necessarily required to raise it for employees in other cities. This leads to feelings of inequality within the company and the demanding of equal pay. Another challenge that China must address is its increasing air pollution. The pollution is worse in mid to large cities where most of China's industrial growth is occurring. Not only do these large cities have the majority of the manufacturing facilities, but they also require more cars since more workers must be transported from more rural areas. The Chinese auto market still has much room for improvement, and there are a few key areas that must be addressed. In this era of high energy prices, electric vehicles and high-efficiency cars will rule. China already has manufacturing expertise when it comes to producing batteries and will be able to leverage this technology when creating large-scale car batteries. A typical battery can cost $1,000 per kilowatt, and when a typical electric car, such as the Nissan Leaf, has a 24 kilowatt battery, this is by far the largest expense. BYD, one of the largest Chinese automakers, has already decreased the cost of its batteries to just $500 per kilowatt and is able to offer a car with over double the energy capacity at the same price as the Leaf. Working conditions and infrastructure will continue to be key parts in China's strategy. Not only do they facilitate growth, but they will also promote equality and increase stability. Chinese cars will soon be able to sneak into showrooms around the United States. The trend will start on the West Coast, and initially the companies will partner with other dealer networks to sell their cars. However, individually, branded dealerships will not be far behind, and if all goes to plan, Chinese manufactured cars will be as commonplace as any other brand. Discussion questions. What steps must China take to become a technology leader instead of a follower? Which one of the challenges must be addressed first to allow the auto industry to keep growing? What kind of companies should Chinese automakers acquire in order to build scale? How important will green technology be?